Has your government been truthful? Do you know why the withholding tax system was actually put into place? Let me provide you with just one shocking example of how things work behind the scenes. This is the text from a declassified, which was formerly a confidential committee print, on the withholding tax. This was a hearing before a subcommittee of the Committee on Finance, United States Senate, 77th Congress, second session on data relative to withholding provisions of the 1942 Revenue Act, August 21st and 22nd of 1942, printed for the use of the Committee on Finance, available through the United States Government Printing Office, Washington, 1942, summary of comments, statements by Milton Friedman, Division of Tax Research, Treasury Department, Charles Hardy from the Brookings Institution, Mayor Jacob Steen of the Brookings Institution, Randolph E. Paul from the Treasury Department. Now remember, I'm reading from this government document. Overview. Because the war effort resulted in increased production and employment, which caused a sudden large influx of money into circulation, the federal government and the Federal Reserve System had to find a method of, quote, mopping up excess purchasing power, unquote, thereby control inflation and obtain immediate funds for the Treasury. Several plans were put forth before the House Ways and Means Committee and the Senate Committee on Finance to accomplish this purpose. The following points were made by the senators and those testifying before the committee. Number one, the overall purpose was to obtain immediate money for the war effort to control inflation and to get the income tax on a current basis instead of 1 year behind. This was supposed to be an emergency provision, ladies and gentlemen. Point number two, to accomplish this goal, it was recognized that a scheme, that's their word in this government document, it was recognized that a scheme was needed to reach the largest number of people. Number three, that the scheme, regardless of whether it was a coupon stamp or withholding of income tax at source, would constitute a forced loan to the federal government and it would apply to taxpayers and non-taxpayers alike, with exceptions. Number four, where an individual had money withheld and ultimately no tax liability, the individual would file an income tax return, and that income tax return would constitute an automatic claim for a refund. 5. The proposed plan was an emergency wartime measure. So, let me take a break here. This was page 99, or we're going to go on to page 99. First of all, this is an emergency measure for the war. Second of all, they wanted to mop up your spending power. This would be a forced loan to the government, and even if you didn't owe any taxes, they're going to take and use your money for a whole year with no interest and then give it back to you like it's some great thing. Now we'll go to page 99. Statement of Meyer Jacobstein of the Brookings Institution. Quote, it is obvious that it is necessary to mop up the excess purchasing power of the community, not only because of its effect on the price situation, but because the Treasury needs the money and it needs it quickly. Obviously, the Treasury can collect from the consumers as the purchases are made, and the Treasury has the use of those funds long before it would obtain them by the income tax method. Now, there are many ways, of course, mopping up this surplus purchasing power. There is the withholding tax at the source based on payroll, unquote. Senator Clark, questioning. Doctor, what this plan is, it is essentially a compulsory savings plan based on sales tax methods, is it not? Mr. Jacobstein, I should say that is a fair description of it, yes. It is the use of a sales tax method without being a tax. Senator Clark, so far as the impact on the public is concerned, it is precisely the same as a sales tax, except you give the money back sometimes. Mr. Jacobstein, that is right. That is a very fair statement, I think. Senator Danhower used the word self-assessment. If I buy a $1 necktie, I pay $1.10 under his plan. A withholding tax is usually withheld at the source. Here you would hold it not at the manufacturer's end, but at the retailer's end. You are using the retailer instead of the manufacturer to siphon off several billion dollars, depending on the rate of the assessment of a tax. It may be that several systems can be used. Any one of them might be very useful to the Treasury in accomplishing this purpose. But for siphoning off purchasing power into the Treasury from day to day or week to week or month to month, and it does have an advantage. Now, there is an aspect to this question which was not brought out in the original memorandum, which would make the scheme perhaps a little more palatable if certain deductions were made by any method, either by the withholding tax method or direct sales tax method or by Senator Danhar's proposal. Don't you just love what these people were doing way back then? Let us now go on to the statement of Charles Harding of the Brookings Institution. Mr. Hardy states, first, mainly for the purpose of providing an exemption from the tax or forced loan, either one of them. Now, and has been stated a moment ago, this is a forced loan. It should be pointed out, I think, that you can do the same thing with the mechanics of any other tax. That is, under the income tax, you can give out bonds or coupons redeemable in bonds instead of giving receipts for the income tax. You can do that, as far as I can see, with any tax for the whole schedule of taxes. Boy, I'll tell you, back in the days of our founding fathers, these people would have been run out of Washington on a rail. Mr. Hardy continues, I would like to say that we have to bring about a readjustment of consumption in the country to the amount of consumer goods and services that we can spare the resources to produce under war conditions. First, we've got to devote our productive energies to the war. Or you can use the mechanism of the sales tax, as far as I can see, by mopping up the increased purchasing power that is created by the rising amount they receive in their paychecks. On the other hand, if the money is stored up, whether it is in the form of these stamps or in the form where people haven't spent it because they have had no way to spend it, in either case, if it is too large a proportion, you are going to have the problem whenever you do turn it loose that you have now in the other case, namely of having a lot more purchasing power than you have goods and service to make it good with. That is the answer, I think, to the question that might be raised as to why not carry this principle through and apply it to the income tax, corporation tax, and everything else. Obviously, this has the advantage that this definitely sews up the purchasing power in such a way that it cannot be released until we discover the proper way to release it. I think it has a great advantage over the deficient spending program. This program just postpones the problem of administration in deciding how much purchasing power is available to release and to what extent it will create the old wartime inflation over again. Unquote. Ladies and gentlemen, the private central bank is the one that creates inflation by manipulating our money supply.